The truth about your piggy bank. You have been deceived. Saving is safe. Saving is smart. Saving is the path to wealth. These are advice from the last century. The truth is, if you only know how to save, you are throwing away your future. Money is not something to be stored. It is a form of energy that needs to be circulated. When you lock money in a bank account, you are letting it slowly die in silence. Your biggest enemy is not overspending. That enemy is called inflation and opportunity cost. Today, we will shatter the illusion of the safety of saving. 1. The invisible thief named inflation cash is trash. Sounds extreme? But look at the reality. Every year, the value of your money loses some of its purchasing power while gas prices, electricity prices, and food prices keep rising. The truth is, inflation is an invisible tax on those who are financially lazy. If you leave $100 million in a glass cabinet today, in 10 years, it may still be $100 million in number, but its value is only half as much. You are working harder just to buy fewer things. Saving without investing is the way you choose to become slowly and steadily poorer. Consequence: you will have to work until the end of your life just to keep up with market inflation. Solution: keep only an emergency fund sufficient for 6 months. The rest must be pushed out to fight. 2. The price of false security. You fear risk. You fear losing money when investing, so you choose to save money because it is safe. But here's the problem: that safety is a cage that imprisons your freedom. In finance, the greatest risk is not losing money on investments, but doing nothing at all and accepting a return lower than the economy's growth rate. When you choose absolute safety, you are signing a commitment that you will never achieve a financial breakthrough. A bank interest rate of 5 to 6% per year is essentially just a way for you to break even with inflation after deducting all taxes and fees. The consequence: you remain stuck in the middle class forever, working a salary job and watching those who dare to take risks surpass you. The solution? Change your mindset about risk. The real risk is having only one source of income and only one way to keep your money. 3. The soldiers who are asleep. Your money is the soldiers. Their job is to go out and bring back new soldiers. If you keep your money in the bank, you are locking your entire army in the barracks and feeding their guards. Logical analysis. Investing is the way you make money work for you instead of you working for money. Every capital you put into stocks, real estate, or business has the potential to grow over time thanks to the power of compound interest. Rich people do not work for money. They own assets that generate money even when they are sleeping or traveling with their family. Consequence: if you don't have this army fighting for you, you will be the only one who has to go to battle until you are exhausted. Solution: consider every expense as a loss and every investment as planting a seed. 4. The psychological trap of surplus numbers. We like to see the number in our account increase. It creates a false sense of power. It makes you feel like you are making progress, but that number is just characters on a screen if it is not converted into assets. True wealth is not measured by how much money you have in the bank, but by how many assets you own that can generate sustainable cash flow. A person with 1 billion Vietnamese dong in savings can still fall into financial hardship if there is hyperinflation or they suddenly lose their job. But a person who owns an investment portfolio that generates 20 million Vietnamese dong per month is truly free because they no longer depend on anyone. Consequence: you become greedy over small numbers, but blind to the great opportunities passing right before your eyes. Solution: don't look at the balance. Look at the asset portfolio. Turn yourself from a consumer into an owner. 5. The power of time and compound interest. Time is the greatest leverage. Many people wait until they have a lot of money to start investing. This is the deadliest mistake. The truth is, 10 million invested at age 20 is worth more than 100 million invested at age 40, thanks to the power of time. Compound interest is the eighth wonder of the world, but it only works if you give it enough time to roll your snowball from the top of the mountain down. Every day you hesitate and choose to save cautiously is a day you are losing hundreds of millions of dong in your own future. Consequence? You will have to spend an amount 10 times greater in old age to achieve the same result that you could have had if you had started earlier. Solution: start today. Even if it's just 500,000 or 1 million dong, time is more important than the amount of money you have. Philosophy of true freedom: saving is the first step, but investing is the destination. Saving gives you a cushion to fall back on, but investing gives you wings to fly. Do not confuse not spending with becoming wealthy. Wealth is the result of discipline, knowledge, and courage. Be brave enough to step out of the piggy bank's comfort zone. Learn how to make money serve you instead of becoming its slave.
Your financial future is in your hands, not in the bank's safe. Call to action. Are you letting your money sleep or making it work? If you are ready to learn how to invest, comment invest below. Don't forget to follow us. We will build freedom together, step by step.